Hello everyone, I'm Neville Saliba, a corporate reporting specialist focused on IFRSs.
Hi everybody, I'm Janice Isler and I head the technical and quality team here at Zampa de Battista within the audit department.
And together we have been publishing a financial reporting and audit newsletter, which has been a thing for the past 4 years.
I would say, yeah. What do we do in this newsletter, Neville?
We go through any updates, any changes that we have from our separate specializations from financial reporting. And
different number of sources that we refer to, okay? In my case, the IAASB website,
in my case, the IASB, and any other IFRS pronouncement that comes out.
Yes, so we do refer to these websites and we try and summarize any news that is relevant to that quarter and put it in a letter for you. The letter is split into 3 sections, audit, financial reporting and ESG. And the purpose of this podcast is basically to talk about.
To build upon all that, to take it a step further and to discuss the news items that we have for that quarter and
definitely
to give our interpretation of what we have in front of us.
Yes.
So, yes, before we start off, Jan, we must say that anything we say in the podcast and in the newsletter and in any of our articles, actually, shall not be construed as any accounting, audit, financial reporting, or other form of advice.
Yeah.
If you have any particular scenario which is either related to the news items that we put out, or also related to any other financial reporting or audit matter, please feel free to reach out and we would be happy actually to help you on that.
Yes.
We'll start off. We can start off. Neville. We're starting off with something big. I'm glad to be announcing this new development on our first edition of our podcast.
Yes.
IFRS 18.
Yes.
A new standard. A new standard which has been published by the IASB in April 2024. So one might tell, listen, isn't this a quarterly podcast? How are we publishing something in April in the first quarter? A cut-off in March. We're including IFRS 18 in this edition of the podcast because we had quite a few details on the salient point of IFRS 18 in March and even before that.
Yes.
So it made sense to include it in this iteration.
Neville, maybe for those who might not be very aware of what IFRS 18 even is. What does it? What is it covering? What is it?
IFRS 18 is basically the replacement to IAS 1.
Okay.
So it focuses on the presentation and disclosure of information in the financial statements.
Okay, so we're saying it's superseding IAS 1.
It's superseding. The content in IAS 1 is going to be included in IFRS 18.
Okay.
And also in other standards which have been slightly amended due to the change. And it is important to note at this stage that the standard will not in essence change the measurement approach or any accounting measures that we usually take on. Mm-hmm. It will not change the initial recognition or subsequent recognition of any transactions or events that happen during a year. But what the standard will change is the way information is communicated in the financial statements. So it will purely focus on the presentation and disclosure of information within the financial statements.
Okay, well, what was the purpose, Neville, of the change? Why did they feel the need to create this new standard?
It's important to look at why we got to this stage. This standard, which will impact all of the companies which will apply IFRSs, which already apply IFRSs. This impact has been triggered from stakeholder concerns across various areas in our financial statements. This stems from a project, the Primary Financial Statements Project, which has been going on for quite a few number of years now. I remember that we were discussing this project back in my university days, so 5-6 years ago when we were discussing this project, and it's a very important point.
Yes, and now we see it has developed.
Come to fruition.
Yes, that's it.
The triggers for it were stakeholder concerns about the way the statement of profit or loss is presented currently, about the information we have contained within the financial statements on management performance measures. So some might call these measures either alternative performance measures or non-GAAP measures, such as EBITDA or adjusted profit for some purposes. And the third point is stakeholder concerns on the way information is aggregated or disaggregated.
So they felt it could be improved.
There were a lot of comments that financial statements in general need to improve across these areas.
Okay.
Mainly, for example, in the statement of profit or loss, I get this from experience that a lot of clients usually ask us listen, am I presenting the statement of profit or loss correctly? Because it's different from, let's say, a set of illustratives that
we've
another
referred to,
company might
yeah.
have referred to, or from a related party that prepares financial statements.
Okay.
And the answer is possibly yes, because it's subject to interpretation.
Yes, that's it.
There isn't one way to present a statement of profit or loss
Yes.
currently. And investors and stakeholders usually end up in a situation where they have different versions of the same statement, which are trying to provide the user with the same thing.
Yes, and that might be confusing perhaps for them.
It does lead to confusion,
Yes.
it does lead to lack of clarity
Yeah.
and lack of standardization. So what IFRS 18 is doing with this, and this is very, very important and very interesting, is that it's taking particular line items within the statement of profit or loss, such as the operating profit and the profit before finance charges and taxation. And it is including a definition
Okay.
to those line items. What this means is that the user now knows exactly what is included in that particular
Within that,
line item.
within
What
that
is
line
being
item.
deducted from revenue, what is being deducted to get to the profit figure, and so on. It goes a step further than this. You know, the statement of cash flow is categorized between the operating, investing, and financing section.
Yes.
This standard is also going to provide definitions to different categories, which are going to be operating, investing, and financing, the main categories,
Yes.
within the statement of profit or loss.
Okay.
Therefore, we're going to know what is included in the operating section to get to the operating profit within a statement of profit.
Okay,
or
so
loss.
quite a bit of
Standardization.
Yeah.
We're trying to, help the users understand better what is included.
Yes.
Improving the way information is communicated,
Yes.
which is the main aim of this project and of the standard.
Now we do tend to assume that the users of the financial statements do understand the information, but the truth is not everybody does.
That is,
there
that
is
is indeed a
difficulty from
problem.
certain
Yes.
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 So the clearer.
The clearer it is, and there was a period with financial statements where we've got a further than clarity. We're including a lot of information in the financial statements, which obscures the clarity of the most material, the most important
Yes.
part of
Yes.
it all. So we're
Definitely.
trying to get a bit of clarity back, bring back understandability, and put it in the financial statements that we are issuing.
Okay. Very
There are other
interesting.
changes brought
yeah.
out by IFRS 18, such as reconciliation. We mentioned non-GAAP measures, such as EBITDA. IFRS 18 will now require reconciliation between that non-GAAP measure and the closest line item within the financials, which is defined by IFRS or by IFRS 18. So you'd have a reconciliation between what is added, what is removed from a line item which we know, which we're used to.
Okay.
That will again, help in by the way of comparability.
Yes.
Because these measures might be important for investors and for other stakeholders,
yes.
which are
to
using the
better-
financial statements, and now they know what is included within them.
Yes, and so these changes are already implemented. Neville, what's the?
The effective date of the standard is actually the 1st of January 2027,
Okay.
but
so
we
we'll
must
have-
keep in mind
yeah,
that they are yet
still
to
a
be
bit of time.
endorsed by the EU and so on. But it's
Okay.
important to keep abreast of these changes and these developments.
In fact, quite a bit of standards, new standards coming into play. And this is another news item that we have in here. There was more than a new standard. There was a series of videos released for the standard for LCEs, less complex entities.
Okay.
And that is basically coming about to help users better understand what this standard is.
And what are exactly these less complex entities?
So a less complex entity is one that is less complex than your normal entity.
Okay.
What comes out of the standard is the distinction between small entities and less complex. So whereas before we'd refer to entities by their size, this standard is focusing on entities that are less complex, and that is when you apply this auditing standard. It is a standalone auditing standard. So using this standard means that you don't need to refer to the other auditing standards. It's sort of everything compact in one.
That's very interesting, but does it sound a bit subjective in terms of what a less complex entity is? And
It does actually define within the standard, and it also gives guidance into which entities can use the standard, and also guidelines on which entities cannot use the standard. So yes, for example, listed entities, public interest entities would not be able to use the standard. Does go into quite a bit of detail here into the qualitative aspects and the quantitative aspects as well. Okay, so naturally, if an entity is a complex entity, and that it would go into more detail, the video does explain this, then the standard shouldn't be used because naturally you're falling out of the scope of those requirements.
Okay, so you mentioned videos. So what do we exactly get out of?
So in those videos, there are the IAASB did release a 3-part series over here. Okay, on these videos, I think if you were to watch the 3 parts altogether, we're looking at maybe 30 minutes of videos. One of them going into the objectives, the benefits, of the standard. We have another one detailing the conditions under which the new standard could be used. So as I mentioned, when you can't use the standard and when you can use the standard. So that gives users a better understanding of when this can be applied or not. As well, for example, if your jurisdiction does not allow you to apply the standard, then that is one of the things prohibiting you to use the standard. And then there's a 3rd-part video on an in-depth understanding of the design, the principles, the layout, the way it is. That can help users, again, better understand what we expect to see within this standard. So, excuse me, definitely very, very useful. These are videos released by the IAASB. Which are definitely very helpful for people to see. Even I tend to watch these even if I'm cooking or if I'm, you can really just listen to these on the go. Yes,
like
that's it, definitely. There were also on the subject, Neville, there are also videos released on the new fraud, the new fraud standard, the ISA 240. Which has been, well, it's not a new fraud standard, apologies, it is a revised standard. So they are looking into revising the ISA 240 in relation to fraud. And this came about from a number of corporate failures.
And what is the proposed change?
There are a number of proposed changes in this standard. It is still in exposure draft stage, so it's still in the process of receiving comments. On this. However, yes, it is a very important standard, when we are doing our audits. A number of if I just give you a bit of a background to this, there are a number of massive corporate failures, if you're looking at Lehman Brothers, the fall of Enron, there was Arthur Andersen who went down with Enron, because they did not carry out sufficient procedures, or maybe more than they did not carry out sufficient procedures. They were told to be they were perhaps involved. There. So it is a bit. So you would probably tell me, but auditors are not responsible for the prevention and detection of fraud. No, we are not. However, we are responsible to obtain reasonable assurance that the financial statements are free from material misstatement. And naturally, that means ensuring that's also free from material misstatement relating to fraud. So yes, this ISA comes about, this revised ISA comes about to address these matters and to ensure that where possible we do identify fraud in the financial statements.
So I suppose this change should clarify the auditor's stand with respect to fraud and the obligations.
Yeah, so in fact what it does is it clarifies the auditor's responsibilities. For example, that's one of the changes. You can tell me, so does the auditor have more responsibilities? No, we are clarifying them. We are explaining them. And the way it does this, for example, is putting the auditor's responsibilities before those of management. So in this way, it is really ensuring that these are prioritized or more than, and then they're giving the focus and the attention that they deserve. Another thing that the standard goes into is emphasizing professional skepticism within the audit. As you know, it is very important for us to have that questioning mind, to be asking our client when something seems a bit off, or something perhaps might not make sense. And not being professionally skeptical can result in us not identifying material misstatements due to fraud. So yeah, it does really emphasize that importance within the new standard. It also has a separate section. It also emphasizes sort of the risk identification and assessment. So yes, when we carry out an audit, we want to identify and assess risk to see where a material misstatement can lie. And what the standard wants to do is to bring our risk identification and assessment more in line with that of ISA 315 revised. So yes, quite a bit over there. A number of other changes, Neville.
There's quite a bit in this.
Yes, there are 7 changes. In fact, there are additional documentation requirements, change related to circumstances when fraud or suspected fraud is identified. They actually put in a new section within the standard to clarify exactly what auditors should do when they identify any fraud or suspected fraud. So again, definitely trying to clarify more than anything what needs to be done in instances of fraud or suspected fraud, and what we can do to address the audit by applying that fraud lens and really ensuring that we are doing the most we can when it comes to fraud risk. So yes, definitely a lot there to consider. I do definitely encourage you to read the newsletter, which gives more detail over here.
I think it's now time to move on to the next section within the newsletter, which is we're taking it local now.
Yes.
Big news, changes to GAP SME.
Okay, all right.
So we have amendments to GAP SME. This is quite recent. This is obviously this past quarter, where in the 1st of March we had there was a publication in the Government Gazette where these new changes, these new adaptation to the regulations to the main general accounting principles for small and medium-sized entities will have the intention, and I'm reading here, clarify certain aspects which are already incorporated in the current regulations. So we're seeking to clarify what there already is, targeting any areas which would lead to uncertainties for the preparers, rectify some inconsistencies and typos, and align the current regulation with concepts and other rules which are stemming from other reporting frameworks, both from a financial reporting perspective and also from an audit perspective, to ensure that everything is aligned.
Okay, so we're definitely seeing a lot of changes over here, revisions to standards.
Yes, we were bombarded in the first quarter.
Yes, which is important because the truth is there are so much developments. And yes, we're moving more towards a technology. How do you say era? Well, it's more technology based. So everything we do need to ensure that our procedures are adapting with the changes.
Yes.
So Neville, what are they? What kind of changes are we looking at here?
We have some changes which are more or less a formality kind of changes, changing typos, as I was explaining, and making sure that everything is consistent.
Okay.
But other changes are quite significant, and we'll point out which the significant ones are. There are 4 main changes. The first one is within the PPE section from GAP SME, which adds minor disclosures for small entities. These disclosures were already applicable for medium-sized entities, and it basically requires disclosures centered around the basis of valuation when you have revalued property.
Okay.
We have some change within section 9, which basically looks into financial assets, financial liabilities, and equity.
Okay.
And this introduces a fair value through P&L designation option for financial assets and financial liabilities. Sounds like a lot, but really what it is doing, this change, is streamlining this section with the changes which are introduced by GAPI, the insurance standard version of GAP SME. And the main aim of this new designation option is to be used when it reduces measurement uncertainty or alternatively relates to a group of financial assets or liabilities which are managed or performance is evaluated, the standard puts it out, through a fair value basis. So the financial assets are evaluated by fair value. And it would make sense in that case to designate it as fair value through P&L.
Okay, and here we're seeing changes, Neville, to both small and medium entities. So
yes, with respect to the second change for financial instruments, that relates to both small and medium-sized entities because it relates to measurement rather than disclosure.
That's it.
And there's this third change, which to be fair, it's my favorite change
Okay.
from all these. And it relates to intangibles within Section 11, Intangible Assets.
Okay.
And it is centered around the treatment of cryptographic assets.
Okay.
This change is excluding cryptographic assets from being treated under Section 11 intangibles. Therefore, we can no longer, under GAP-SME, call a cryptographic asset or treat a cryptographic asset in line with Section 11, in line with intangibles.
Okay.
There's a bit of a big change.
Yes. So I know that before, when we had intangible assets, we were referring to a number of different standards, really.
I think the general understanding out there is one which stems from IFRSs, which is you either treat a crypto asset as an inventory.
Exactly, under
if it's
IS2.
for short term, held for trading purposes, or alternatively under an intangible, as an intangible asset. But under GAP-SME, when comparing crypto assets with the intangibles section of GAP-SME, one must keep in mind that GAP-SME requires you to amortize your intangibles, so you cannot have what we call an indefinite useful life.
Yes.
Therefore, we're taking this cryptographic asset and we're amortizing it over a number of years if we treat that crypto asset as an intangible. And alternatively, there is another concept which, under intangible assets, GAP-SME does not allow you to revalue your assets. Therefore, you cannot, we have a quoted price for crypto. You know that there is a specific price which is applicable at this point in time. You cannot revalue your crypto upwards under intangibles, Section 11 of GAP-SME. So, yes, the change was merited. Yes, I agree with it. But now, good point, it leaves the preparers kind of, okay, so what we do now?
Yes, how do we...
What can we do? How do we account for it?
Yes, what do we refer to? What's the...
In that case, crypto is not mentioned in GAP-SME. So we would have to keep in mind Section 5 within GAP-SME, which provides us with a hierarchy, which we need to go through, and there are certain concepts which are not stipulated by the standard, by GAP-SME.
Okay.
And the hierarchy, from the way I see it right now, will lead a preparer to put out there his own accounting policy choice, his own accounting policy for the treatment of crypto.
Okay.
By taking on other reporting frameworks, probably IFRS, because that is what we're used to the most, but GAP-SME does not limit you to IFRS.
Okay, and when would the effective date be of this new the changes to GAP-SME?
So, as things are, the update did not include an effective date, but there is a clause which says that these changes are applicable from 2 months after the publication in the Government Gazette.
Okay.
So technically, my understanding is that we can apply these changes from
we mentioned
the 1st of...
So we mentioned the publication was 1st
of March.
Yeah.
So 1st of May, we can apply these changes, including that in the basis of preparation, obviously, that we are applying these changes.
Okay, very interesting.
Yes, very interesting from this perspective of a local scenario.
Yes, definitely. On that level, I'm also going to be going into the proposed changes that were made to quality standards. Okay. For those who might not know, there were changes made to the ISBA code, okay, by the IESBA in relation to the definitions of publicly traded and public interest entities. Now, what happened is the IAASB, in response to those changes made by the IESBA or ISBA, to the ISBA code, did propose changes to its definitions within the ISAs, okay, the standard, the auditing standards, and the quality standards, okay? And when we refer to the quality standards, we're looking at ISQM1, ISQM2, and ISA 220 revised.
And are the new changes, definitions we're stating, are they harmonized now? Are they converged?
Yes, that is the scope, okay? They want to try and they're trying to bring convergence between the definitions being included within the ISBA code and those being included in the standards, the ISQM standards, basically the ISAs, and ISRE 2400. So yes, quite a bit to read into over here. Not very straightforward. There is quite a bit of reading material if you look at that. But what is important to note is that whereas before entities might not have fallen within the scope of a public interest entity, now, due to the change in the proposed definitions, it could be that you're looking at a pie when before you were not looking at a pie. And on the contrary, that before something was a pie and now it is no longer a pie. So yes, it will definitely mean that audit companies need to revisit their list of clients.
Changes quite a bit from audit perspective.
Yes, and see where these changes might be affecting the scope of their audit. So that is definitely something that needs to be addressed by every audit firm.
From a financial reporting perspective, there's again quite a bit in this quarter. We've so far looked at something from the IASB, so we had IFRS 18.
Yes.
We have looked at something local, so we have changes to GAAP SME. It is now time to explore further, to widen our borders.
Okay, let's see.
In fact, we have some changes from other bodies. We have changes from the FRC and changes from the Financial Reporting Council and changes from the FASB.
Okay, why are these changes important, Neville, that we're going into?
Good question, and this is a point that gets raised to me from quite a few preparers about our newsletters and about my LinkedIn posts.
Okay.
I see the importance of keeping abreast of these international changes from financial reporting perspective from three main areas. The first area is usually from a service line which we provide is when we consolidate a subsidiary within a group which prepares its financial statements under another GAAP, which is not GAAP SME or IFRS. Therefore, that subsidiary, the figures of the subsidiary will need to be converged, translated basically into a language which is compliant with IFRS and GAAP SME. So here we're looking at different measurement options. You'd have to look at the accounting policies and look at how you can go back on the transactions that have been recorded in a set of financial statements and change those transactions into a way which turn those entries into a way which is IFRS or GAAP SME compliant. So the first one is in consolidations. The second one is usually when we have a share of profit from an associate.
Okay.
The profit figure would need to be IFRS or GAAP SME compliant in order to call your financial statements in line with IFRS or GAAP SME. And the third one is when we have a standalone entity preparing financial statements in Malta, but that entity is part of a wider group which prepares financial statements and requires that entity to record its bookkeeping transactions and finalize its trial balance and management account in line with a foreign financial reporting framework. Therefore, those set of management accounts would need to be converted to be again IFRS and GAAP SME compliant in order to be audited and in order for financial statements to be submitted.
Okay.
So yes, that's
quite a bit there.
That's quite a bit, yes, and that's basically the reason why we need to keep abreast of these changes.
Yes.
So
yes.
Changes, okay. I won't go into a lot of detail here, given that we're looking at foreign financial reporting frameworks. So the FRC, the Financial Reporting Council, is the body responsible for the FRSs, the FRS 102 in this case, which is applicable in the UK and the Republic of Ireland. And the change there is centered around leases and revenue.
Okay.
Starting off with leases, they are doing away with the distinction between an operating and a finance lease.
Okay.
So, yes.
So how will leases now be treated? Are we looking at them as one, or I imagine so?
The situation now is basically to treat leases under FRS 102 in line with mostly aligned, harmonized with IFRS. So
yes.
we have a lease liability, we have a right of use asset, and it's a good indication to see harmonization with IFRS from that perspective, but not with just that perspective, also within revenue. So what FRS 102 is going to include now is a simplified five-step approach from IFRS. So we're going to have this simplified approach where similar to IFRS, we'd look at the promised performance obligations and the satisfaction of those promises in order to recognize revenue.
Okay, very interesting.
So yes, the FRS is moving closer to IFRS and decreasing the scope, the need for convergence adjustments in that case, in those three situations we identified earlier.
I imagine more detail in your newsletter, Neville.
Of course, there's more detail on this in the newsletter. We'll include a link to the newsletter within the description to this video, and there's further links within the newsletter itself to the FRC's website.
Our newsletters do include a section on audit, there is a section on financial reporting, and finally we have a section on ESG.
Indeed.
Any changes over there? Neville, I don't know if you want to run us through anything.
I'll go through the main change for ESG. We have EFRAG publishing technical explanations on ESRSs, the first two sets of technical explanations. To simplify the matter, ESRSs are basically the European standards on sustainability reporting standards, and these European sustainability reporting standards, ESRSs, were published by EFRAG and endorsed by the EU on the 31st of July 2023. Since then, specialists like myself have tried to get accustomed with these ESRSs.
Yes, quite a bit of reading
to go through. And in the final quarter of 2023, EFRAG launched a Q&A platform centered around the ESRSs to ease the implementation of these ESRSs for the companies within the scope of the CSRD, the directive which requires the use of these ESRSs.
Yes.
Jump into this quarter, 2024 Q1, we have these technical explanations which build upon the information which is being collated from these Q&As. So yes, there's the first two being published, there's a link to them in the newsletter, and obviously we invite you to read further there.
Yes, we do with every news item that we report about, we do include links to the news item, whether it's the IAASB site or the IFAC site. And any reading material that might help you to better understand sort of where this is coming from.
So this brings our podcast to an end, Jen. It was a great pleasure to launch this first edition of our quarterly podcast with you.
Same level, definitely a pleasure here as well. May we remind the viewers that there is additional information within the newsletters themselves. May I remind you that the newsletters are split up into three. Audit, financial reporting, and ESG. So anything we've been discussing here in today's podcast, you will find additional detail within the letters. So we do encourage you to read those.
And I take this opportunity to thank everyone who was involved in the newsletter, behind the scenes with this podcast, our department, our teams, which have been helping us throughout all this, and which led to the culmination of this podcast.
Yes, definitely.
We thank everyone who was involved, our families, educators, mentors. Nannu, see ya.
Yes. Everyone who
feel free to reach out to us about anything we have discussed or any financial reporting or audit matter in that respect.
Yes, and we look forward to holding the next podcast in 3 months' time.
3 months' time?
Yeah.
Thank you for listening.
Thank you.
Goodbye.
Bye.